Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. Got another of our executives in mining interviews. And today we have McEwen Mining, Rob McEwen on the show. Thank you very much for joining us, Rob.
Happy to be on, Allan. Thank you.
And I'm happy to have you on because the last time we chatted, your stock is up about 100 and some percent. I pounded the table in my reports and in our interview that I thought you guys were very undervalued. Now I just think you're undervalued. And I think that we'll have a great conversation about McEwen Mining, what you got going on in gold and copper today.
All right.
And then let's start, Rob. You're an avid follower of the metals market, and I'm seeing some great things transpiring that I wanted to open with. One of the things that I had been talking a lot about in 2022 was the similarities I was seeing with the year 2000. Valuations of companies were at record lows. The sentiment was brutal. But I saw signs that things were going to turn around. And one of those things that has turned around is the US dollar is no longer on a relentless bull market like it was in from early 2022 until about November. And lately, it has gone through a death cross where the 50-day moving average is now trading below the 200-day moving average. And at the same time, gold is at the verge of a golden cross. Copper is on the verge of a golden cross. And you guys are bucking the trend. About 4 to 6 weeks ago, you went through a golden cross. So why don't we start out with the big market mover, which I think is the US dollar. Where the US dollar goes, so goes the price of gold. And where gold goes, it's often a sentiment driver for the price of gold and the metals complex and the mining related stocks. So what do you think about the US dollar these days, Rob?
Well, it's enjoyed being at the top of the heap for quite a while. And I think it's in trouble, but so are all the other currencies. When you look at the massive amount of monetary stimulation that's taken place, and the central bankers not only do that, they just created this very intoxicating environment where they drove interest rates through the floor, kept them down there, and encouraged incredible financial speculation on all sorts of asset classes. And that's, well, if you're a student of history, you know when that happens, it's not going to bring anything good to the fiat currencies. But this was on a global scale. I think the people are waking up and they're seeing prices rising all across the board. I mean, a portion of that was due to the disruption caused by COVID, but then you have some wars starting in conflicts, arms conflicts that are disrupting supply chains, and all of us are feeling the pinch. I don't know if in where you are, Allan, if you're seeing food prices going up and rents going up and few energy prices are going up. I mean, people are starting to look around and say, well, where can I put my money that will protect me? And the precious metals have been neglected. You're seeing the crypto market falling out, the real estate market slowing down, some of the big tech companies having given up a lot of their gains. And gold was just sitting there being ignored. And now it's coming back into the fore. And I, like you, believe that relative to the dollar and other currencies, we're going to see gold start to run. And
Well, and when you look at such an important economy as the United States on the global scene, and And for the last 14 years, the real estate market and the economy has been built on near zero interest rates. And now they're aggressively raised it to 4.5. They do talk about peak interest rates somewhere between 5 and 5.5. So they probably only have about a 0.75% move left in them. But they're breaking things. The U.S. real estate sales have fallen off of a cliff at the most significant levels that they've ever in the recorded history of keeping track of U.S. sales. They're dropping dramatically. And it's no wonder, Rob, when you build a real estate market on zero interest rates, and you start now, the mortgage rate is probably about 7 to 8%. That is going to break the real estate market. And you look at the inverted yield curves across the board. It doesn't matter which term you use. They're all pointing towards they're breaking the economy as well. And they still say that they're not going to lower interest rates, but doing it the way that they did in the past, you would look at maybe 2 or 3 moves and then see what the data says. Here, they've done unprecedented moves that supported the U.S. dollar. People buy the U.S. dollar because they can get good rates on their debt. I just think that it's no wonder the U.S. dollar is going through a death cross. And, another trend that I watch is the January effect. It's because, it has a good impact on the year because the institutions are sort of looking at a year ahead and positioning themselves. So they're positioning themselves out of the US dollar and into things like gold and copper.
And you're also seeing that with central banks buying of gold, which is a real reversal. And I've seen some numbers. I mean, this is the first time they started really buying as aggressively in 50 years. So,
right. And across the board.
Yes. And you're looking and they're saying, well, we hold all these different currencies, fiat currencies in our reserves. And I think they're coming to the conclusion that maybe it's a good idea to put into something that's time tested and holds value, and that being gold.
Well, even in recent times, Rob, had you have owned gold instead of many of the currencies throughout the world, you would have been protected against inflation in your domestic.
Exactly.
So there's a lot of great things shaping up for the metals that you're involved with. So let's get on to McEwen Mining. When we last spoke in September, you guys were trading at around $4 a share. You've since doubled in a bit to 9 and change. I still believe you're very undervalued because you're trading at about a $400 and some million valuation. And I can see junior mining explorers that are still, decades away from producing anything are trading at higher valuations than you. But what has really, I think, got the market's imagination lately for McEwen Mining is your copper stuff.
Yes.
So why don't we open with the copper stuff, Rob?
Okay. And in terms of currency, you're dealing with Canadian dollar currency, right?
Yes.
In there, when you quoted those prices.
Right.
Because I think we were just a little above $3 in real dollars, US dollars.
US dollars. Yeah.
And now we're up over 7, just around 7. Well, I've always believed that our copper project would be a big value creator for the company. But say in 2000, 2001, and bit of 2002, we had real operational problems at our precious metal mine. And
right.
I guess we unfortunately gave the market guidance of what we were going to do. my operations said, this is what we're going to do. So I shared that with the market, and then they didn't deliver. And it hurt our share price and our shareholders as it came down. And our share price went down, but I had this copper price was starting to rise. And I said, well, how are we going to surface that value? Because they're really not seeing it, or when they look at it, they go, all right, its assets aren't performing as well as it should be. Its treasury is small. And to move this copper project forward, you're going to need a lot of money. So are we going to have to issue a lot of shares to do that? And the thought was, well, let's try to pull that asset out of McEwen Mining and get it funded separately. So as we talked about before, in our earlier conversation, I put 40 million in and we ended up raising 82 million. And amongst that monies, Rio Tinto, the second largest mining company in the world, came along and bought 10% of the copper company. McEwen Mining owns 68% of the copper company right now. And well, we're looking to see if we can find another investor that might be a consumer of copper at the other end. But it's according to the PEA that we put out several years ago, it had a 36-year life. It'd be producing about 400 million pounds of copper a year for the first 13 years. A number of surveys have shown that we'd be at the bottom of the cost curve in the lowest cost quartile in the industry. And it was the 9th largest undeveloped copper deposit in the world. So said, this could really propel McEwen Mining. And now we're seeing the copper price going. We've been drilling. We hope to get a PEA out, an updated PEA in this quarter. And then we want to do an IPO and use the proceeds to fund a feasibility study and do a secondary out of McEwen to retire a good portion, if not all of our debt. So put our balance sheet in better shape and fund the copper. And when you look at the copper project, there are 2 public reference points on what could this project be
Rob,
worth.
do you
Yes.
mind if I interrupt you? Because you just brought up a lot of topics that I want to unpack before we get to the value proposition.
Okay.
Okay. So one of those is that you brought in a big mining partner who, in addition to giving you money, also has a technology that could help your economics out. Do I have that correct?
That's correct. Rio Tinto has an arm, a technology arm called Newton, and they have a process that they're testing our ore with right now. If it works, they believe it would do 2 things. One, it would improve the recovery rate. Heap leach technology usually is a much lower recovery than if you built a mill. And they claim you could get close to the same type of recovery you get out of a mill, but you do it with a heap leach. And a heap leach is much less expensive.
And energy consuming and water consuming.
Exactly. So it has a lot of benefits if you could do that. And they believe they would reduce the time to make those recoveries.
Oh,
So
wow.
you'd get your money faster and you'd get more money if their process works. So
Okay.
that would improve the economics of the project. They came in to look at it.
Now, using the traditional method, you still have a low cost of production in your estimates, right?
Yes.
Well, on a pound basis, what are you looking at in your
right now we're looking at under $1.20 a pound.
Wow. So there's some good margins in there with copper currently looking like it wants to go over $4.
Yes. Yes. And maybe higher all those automobile manufacturers want to put out those electric vehicles, they say, by 2025.
They're 25 and beyond.
Yes.
Yeah. So that's one great thing because, you know, bringing the cost down, getting your money faster. Obviously it wouldn't cost as much to build it, the recovery process compared to the traditional method.
Yes, as you said, I mean, the power used is much less, and water, which is critical in the environment we're in, minimizing the usage of that. And you're not building a tailings dam that could possibly be breached
Right.
and flow down water courses, which is never a good thing.
So as I said, you know, not only did they bring in money and kind of put a good housekeeping seal of approval on the project, they bring in this technology that's quite interesting.
Yes, that's right.
Excellent. So another thing you talked about is you've been doing a fair bit of drilling in anticipation of a feasibility. Now, since we last talked, I saw some results that kind of got me quite intrigued with what you're doing on the drilling front.
We're doing infill drilling to convert inferred into indicated and measured, getting ready for the feasibility. And we're also we've stepped out beyond the model of the resource to either end of the property where we had large geophysical anomalies or signatures that there could be something out there. And we're drilling at both ends of the deposit, and we're down about 1,000 meters on one hole and 200 meters on another. And so far we're still in mineralization. We haven't got assays back yet, but we're encouraged by what we're seeing.
I think if I remember correctly, and correct me if I'm wrong, but as you went in one direction, it looked like there was a potential for it not only to get bigger, but higher grade.
Yes, that's correct.
Is that the 1,000-meter hole you're working on?
Yes.
Ah, okay. So you have some pending results that could be quite significant.
Yeah, so with the infill drilling where we're converting, they're confirming and coming in at or better than what we had. But these outside holes, we have a special interest in because that could extend the deposit or just show that porphyry copper deposits normally exist not by themselves, but in clusters. So you're looking to see if there might be something more.
Well, and the other thing that they exhibit often is that the closer you get to the heat engine, the hotter your grades are going to get.
That's right. And I mean, this is a large deposit in the PEA. It already had a 36-year life, but we're only mining 55% of what we had found. So it could go for a very long time, be a very long life asset.
And that brings up another topic, which is that you already have what major copper companies are looking for and the industry needs, because we haven't, for the last few decades, we haven't found the deposits that we need. Even I remember a study that I read about 10 years ago, maybe 15 years ago, and it speculated that we needed to find an Escondida every year just to meet the demands of the emerging economy before the electric vehicle revolution started. So that only amplifies the issue that copper, we need more copper. And you can even see it now in the inventories at the various different metal exchanges are at record lows. And now China is turning things back on. And they consume about half the copper of the world. So you have something that the industry needs, the world needs, and major mining companies have to find attractive.
I'd say that's a good summary. Yes.
Good. When I say all that, I think it's fair to say that it looks like you have a mine of the future in the making.
Yes, and thinking of the mine of the future beyond just meeting the demand, the growing demand for copper. I brought in an architect who's very prominent in the green living, sustainable building space. And when we had everybody sitting around, each time we're sitting around the table, all of our consultants and engineers and planners, I brought this fellow in and said, help us reimagine mining. Help us look at it so that we're using even less water, that there's less affluent, products going into the sky, into the rivers, and that it's totally regenerative. And it's a really interesting exercise because you're cutting down your carbon, you're cutting down your water usage, you're cutting down your power. We've got a connection with the national power company of Argentina, and they are saying we could have all our power could be from renewable sources, solar, wind, and so we're trying to make a model for the industry.
Now, when others talk about innovation, and I'm not just talking about the mining sector, I'm talking about other sectors as well, it can be wishful thinking. But in your case, this isn't the first time you've went down the innovation route. You at Gold Corp, you had the famous Gold Corp challenge
Yes.
that unlocked your depth potential and found jewelry boxes of bonanza grade gold that made Gold Corp the lowest cost producer in the gold business. So this isn't your first rodeo when it comes to innovation.
True. It's the industry, I think, is ripe for innovation, and there's some societal trends that are demanding more, and we just want to be at the front of the curve, trying to show ways. I mean, the one of the models was for accommodation. It's fascinating. They just looked at building it into the side of the mountain, stepping it up like some of the Inca architecture, having a large glass roof and part of it walls, and you walk these long passageways with all sorts of greenhouses. You're growing your own food, you're using the gray water you're dealing with your sewage there, and he's showing yoga studios that are processing sewage that are greenhouses, and there's no smell. So wow. You say, how do you turn this into a more attractive place to work, a healthier place to work, and one that is treating the environment in a similar manner, and just broaden the appeal and understanding of mining and its contribution to modern civilization, and that there are ways of doing it that make it more acceptable to a larger audience.
Well, and I think sometimes that audience of consumers and investors don't really understand how important mining is to the modern.
Yes, exactly.
Yes.
All
this innovation in cars, you don't get cars, those electric vehicles, without metals, and you don't get metals without mining.
Yes, exactly.
But I certainly applaud your efforts to make a green solution even greener.
I'm really excited about it. I mean, it's just
wow. I am too. Okay, so you also talked about the spin out and the feasibility study. On the spin out, you would the owners of McEwen Mining would still own a big chunk of McEwen Copper, correct?
Yes. Right now, McEwen Mining owns 68% of a McEwen Copper. we'd probably reduce our ownership down to about 50%. But I'm expecting, we did our issue at $10. I'm expecting to do it at a much higher level as we've advanced the project when we do the IPO.
That will be really interesting to separate the copper asset from McEwen Mining, yet McEwen Mining still keeps a big chunk of, and you can get a better price discovery for the asset by it being on its own.
That's right. Yeah, I mean, you can look around and there seems to be a preference for pure plays, a pure precious metal play or a pure copper play. When you get them together, and as I said earlier on, we weren't in the strongest financial position to fund our exploration and development of our precious metal assets and do the copper at the same time. So this way we have an independent vehicle that can develop the copper. And as it grows, we have our holdings on our balance sheet improve in value. So
right, and even being able to do the rounds that you've done at $10 a share is pretty indicative of how undervalued it is in McEwen Mining.
yes, well, we also have a McEwen Mining retained a 1.25% royalty on Los Azules. And we have another copper project in McEwen Copper that we owned. It's called Elder Creek. It's in the Battle Mountain Trend, the north end of the Battle Mountain Trend in Nevada, around Lone Tree and Phoenix, Marigold. And Rio Tinto, we signed an agreement whereby they'd spend $18 million on that property over the next 7 years to earn a 60% interest in the property. So it has a classic copper porphyry signature, magnetic signature that they're quite keen on. So, and we have a royalty on it as well.
The spin out is an effort to get better price discovery on your asset, the copper asset, but then you're also doing a feasibility study.
Yes, we're going to drive the copper asset to a feasibility study. That'll take about 1.5 years.
Okay. So more hard numbers than a preliminary economic assessment.
Yeah, that's right.
Okay. So more price discovery.
Yes.
Okay. Yes. Now you also, before we get on to the valuation prospect, you mentioned that you would be also looking at a consumer partner, possibly. And I find that very intriguing because I think that's the wave of the future, that these copper end users are going to need to go to the mining companies to secure what they need because everything's so tight in the copper supply chain. I find that concept very exciting as well.
You can see examples of companies, battery makers, auto manufacturers, and others starting to put together a vertically integrated stream of supply. And I guess that's just the consequence of one moving into electric vehicles and recognizing, as you mentioned right at the beginning, there's a big deficit forecast. There's not enough copper currently being produced to satisfy the projected demand of just the automobile manufacturers, let alone the wind turbines and the urbanization that's continuing in Asia. So you say, well, how do we contain costs? Well, we'll try to lock up a supply of it. And at some point, you just go, well, what happens to the price if there's nothing available and you have all these cars being built and all these wind generators being built and all these cities being built in Asia?
Well, it certainly puts an onus on the end user to, if you could secure 30 some years of your needs or even a portion of your needs, as a business person, that makes a lot of sense.
If you look at the beginning of the auto industry and Henry Ford, and he had mines in Michigan, he had rubber plantations down in Brazil and the Amazon, and he just looked at where do I get these parts? Or even McDonald's going into Russia, they had to teach the farmers what to grow and look at the quality and of all the products they needed over there. So I
Well,
think we're
that's an
in.
interesting point you bring up, Rob, because back looking at Ford Motor Company, they were at the revolution of the first means of transportation through automobiles. And they saw the need for getting what the raw materials that they needed. We're at a similar point right now in the electric vehicle revolution.
Yes, yes.
So history might be repeating itself.
An emergent industry. Yes,
Yeah.
major shift.
Okay. So now let's get to the valuation. The way I look at it, Rob, is I see an asset that is what the industry needs in copper. I see your valuation that is less than exploration companies. And I see your plans to unlock shareholder value. So you always have good comparables when it comes to valuation. So let's talk about your valuation
All
prospect.
right. So the biggest component would be our copper holdings. And there are two reference points I'm using right now. In the same province in Argentina where Los Azules is, our large copper project, there are two other deposits. There's the Jose Maria project. It was purchased in April of last year for 485 million. And then there is the Filo del Sol project of Filo Mining, and it currently has a market cap of over $2 billion. What I can say about how does it compare to Los Azules? One, Los Azules is at a lower altitude than the other two. Filo goes up to 5,400 meters, which is about 17,000 feet. That's base camp Everest.
Holy moly, imagine working in that.
Well, you have problems. Not only, I mean, us humans have problems operating up there, but also machinery, because the air is less dense. Machinery has to work a lot harder, and they actually work hotter up there, and that's a problem.
Right, right.
So,
When I was a youngster, I was in pretty good shape. So when the forest fires would happen in British Columbia, you had to go way up into the mountains, and I did that. And I remember, how hard it was working. And you're not even talking about, you're talking at the end of the tree line. And where you're talking about for Philo is even higher than that. And I was a hockey player. I was in good shape, and and I was young in my late teens, and it was tough work up there, Rob.
Filo's between about 15,000 and 17,000 feet up in the sky.
Wow.
And
And they have a valuation 5 times your valuation.
Yes, more.
And you have a bigger and higher grade.
So I have two ranges, basically 500 million to 2.2 billion. So we're at lower altitude. We're closer to infrastructure, highways and power. Published resources were larger by several times. And just on the copper grade, at the moment, we are higher grade, just on the copper. So I'm saying, if you looked at it and said, all right, $500 million, we own 68%. So that's a little over $300 million. And there's better than $6 of value, given we own 68% behind every share of McEwen Mining. Just there. If you went and said, well, could we be, I think Filo's going to be more valuable than us. So they pulled some amazing drill holes. But let's say, for the sake of argument, we're equal to that because of the superior characteristics we have in location. And so they're 2.2 billion currently, and we're 68% of that. So that's somewhere around 1,700. And you come down and you're going, well, that's almost $30 a share.
Wow.
So we're somewhere between 6 and 30 just on the copper. And then you have the precious metal assets. We're going to do anywhere from 150 to 170,000 ounces of gold this year. We've finally been able to get our costs down again. So you're in a range where you're producing at about all-in costs of $1,200 to $1,400. So you got a $400 margin in there.
That looks to be growing.
And as you said, there are exploration companies that don't have any production that are trading at a higher value right now than us. So if you were to compare us to a couple of other peers, there's probably another $2 to $4 there just in the precious metals. And then you have these royalties. And Osisko went into, was it Ecuador recently, paid 50 million for a 0.6% interest of a deposit that's smaller than Los Azules. So that would put just the Los Azules royalty at worth maybe 100 million. So that'd be $2 a share just there.
So there's a lot of value.
Yes. So,
To be unlocked.
yes.
So if you look at McEwen Mining sort of as a copper company with a gold mining kicker, let's transition into the gold mining kicker, because on your mining operations, you're bringing down costs and you're improving grade. And that's a hell of a way to make a turnaround in where you had much higher costs and lower grade. You're definitely moving in the right direction on your operations of your gold mines. But one thing that is really intriguing to me, I'm an explorationist at heart, Rob, and I keep hearkening back to the history of Gold Corp. And I see a lot of what you're doing in Ontario, a lot of its similarities to Gold Corp. And I think something that not a lot of people are giving you credit for is the depth potential and the potential to find bonanza jewelry boxes down there that make for very low costs. I kind of want to do my own Gold Corp challenge and look at all your data and see if I can sniff out some stuff.
I'd be happy to provide it.
Yeah, okay. Well, I just think that you're in a similar kind of model. You're in a similar kind of rock as Red Lake. You're even in the history of mining at Red Lake, it started out in the fairly shallow, but what broke it wide open was when you started to get down 1,000 meters or more. And I still think that potential is wide open.
There's lots of examples throughout the region through that Archean group and the Greenstone. In Timmins, I think they get down past 1,500 meters, almost 2,000 meters. And Red Lake was like that. These are big systems that go on for a long time. I mean, they've been mining in Timmins for over 100 years.
They're orogenic gold systems, right, Rob? And look at what a Swan Zone in Fosterville did for Kirkland Lake. Made them one of the lowest the Gold Corp model, low cost producer, high margins, high grade, and was just a cash making machine. And you look at the history of the Red Lake mine, it started out kind of like what you're doing now in the near surface mining, and the depth is wide open.
That's what attracted me to Timmins. One, there was a lot of history of mining in that area along that geological structure, the Dester Porcupine Fault. I mean, they've identified well over 140 million ounces along that fault line. Now, I have to say that at either end of that fault, it curves down and you have the bulk of the gold that's been found where there's more fracturing due to that structure. But I looked at some of the grades at the Fox mine and I went, those are really attractive. And so it is what you need, I felt, was a geological team that could be very good at precisely locating or identifying the location. And then you needed a mining team that went in and surgically extracted it. So you eliminate or reduce the dilution. It's taken a lot longer than I thought to get to there, but in Fox, we've developed an area, a satellite deposit, and been able to put a modern mine plan in, and rather than going over a greater depth, trying to mine remnants and going deeper where it was more expensive. So we have wider widths, better grades, shallower deposit. So you bringing your costs down. And right now, the mine's producing faster than the mill can handle. So we have to work on increasing the throughput. We have a 3-month stockpile of ore sitting at our mill. And so right now we're trying to work on 2 fronts: increase the recovery, increase the throughput of the mill. And then we have a PEA there, preliminary economic assessment, on developing a larger mine. Like right now we'll do 45,000 ounces there, but we're looking at an 80,000 ounce situation down the road, and we hope to start driving a drift at the beginning of 25, or a decline, to get at that deposit at Stock.
Well, you brought
And
something up. You brought something up that has my my explorationists radar going off. Where you get that complex structural story is where you have these deep fluids coming up, and they make their way into all that complex faulting.
Yes.
And structural story. That's a hell of a place to look for a swan zone or two.
Well, the Black Fox property, it goes down to 800 meters, and at Stock, it only goes down to 300 meters. So there's quite a bit of room if we were a similar type deposit to many of them in the area. And that's what we're testing as well.
So in McEwen Mining, you have a turnaround story on your gold project and a fabulous copper project that I don't think is being fairly valued as part, but you're doing work to have price discovery on what the copper asset is really worth, and that should reflect well on McEwen Mining post the IPO of McEwen Copper.
Yes, exactly. So
good on you, Rob. Well, as I started the show out, I talked about looking at you guys when you were very undervalued, and you've made the case that I think you're still very undervalued.
Well, that's my take on it. I mean, I own 17% of McEwen Mining. I own 15% of McEwen Copper. When I put my 40 million in, and I take $1 a year, and I'm looking for a healthy return on those investments. I'm in for 220 million. So,
well, I think you're making a case that you should get a raise here pretty soon, Rob. Maybe 100% raise or something. I'll send a message to your board.
I'd appreciate that, Allan.
Well, Rob, was there anything else? We covered the big market movers of metals, the dollar, the assets, the efforts to unlock shareholder value. Heck of a story, Rob. Did I forget anything?
Well, I think on that macro picture, you were focusing on the dollar as being possibly weakening. And you can look back to when gold took off through the late 60s and into the 70s, and there was concern about inflation and that the Vietnam War was contributing to devaluation of the dollar. What we're seeing today is quite unprecedented because it's not just the dollar, it's most of the fiat currencies in the world. Governments went out and they just were
Turned on the
printing.
printing press.
Yes. And so rather than just one country or a few associated countries doing it, you have this happening on a global scale, just enormous amount of monetary stimulation. And as I said earlier on, they drove interest rates to the floor and below it. And that was intoxicating to anyone who wanted to speculate. And you saw these huge runs in financial assets and in other areas, collectibles and that, because it didn't cost you any money to borrow. And now, as you mentioned, rates are going up and people are starting to feel the pinch. And the cost of goods are going up because the value of those fiat currencies are becoming less. So for your listeners, I think everybody's feeling the pinch in a number of ways, but how do you protect yourself? And precious metals have been one of those things. I also think they should look at grains or foods and energy.
The things you need for modern life.
Yes, exactly.
And then you've also, okay, so you could make the case that, okay, if they stop the raising interest rates, that could cause an economic slowdown in the US. But what makes the copper story different is you're starting out from a base of not enough. And you have a big consumer in China and the electric vehicles that are going to offset any slowdown in consumption from the United States. Yes. So I think the copper story holds together very well, especially if what I think is going to happen is in the second half of 2023, they're going to have to start stimulating again. And if you're going to stimulate, you're probably going to see a lot of money going into electric vehicles.
Electric vehicles, and also it's just the urbanization of Southeast Asia. I mean, that's all sorts of construction, and copper is a large part of that infrastructure. So
as they say, we're in interesting times, Rob.
Indeed.
Alan. Interesting times for our industry, interesting times for McEwen Mining, and interesting times for your operations down there. I like that ideas you're working on of innovation.
Now, as we get that progress a little further, I'll share that with you.
On two fronts, the innovation with the potential from the processing and also how you mine the stuff.
Yes.
Great stuff, Rob.
Very exciting. So
I'm going to wrap it up. If you want, you can listen in and we'll have a talk at the other end.
Okay.
So there you go, folks. McEwen Mining has a tremendous story that I think has not even close to valuing the entire company correctly or the copper asset correctly. I pounded the table when they were half the price they are now, and Rob has made a strong case that they're probably still very undervalued. I think they are significantly undervalued. And most importantly, they're doing the things to unlock the value in the gold operations and in their copper asset. And they're working on some stuff that will help price discovery of what the asset in the copper is really worth. When you look at the valuation, they were funding the copper operation at a $10 per share value. There's a lot to be unlocked in McEwen Mining. I like the trend that it's been on since our last interview, which was on September 22nd. In a short matter of months, it's doubled, and I think it's got more than that in it. And I'll be looking forward to future interviews with Rob McEwen. As always, my shows are for information purposes only. It's important for you to speak with your financial advisors. Do your homework. a place you can do that is, we've had a few interviews in the past with Rob on my YouTube channel at Rocks and Stocks News. I would also recommend you go to their website, look over their corporate presentation, look over their news releases, and I think you'll start to understand why I'm still banging the table on McEwen Mining. On that note, have a great day, and we will talk to you soon.